I was talking to our good friend Angeline this morning in London
Okay.
with the IG crew, and what we were talking about was forget all the unknowns. Who knows this, that, whatever. The known fact is the cost of everything's going up, meaning the cost of an international transaction. The friction in an international transaction is higher, and as a result, the value of everything is lower. Maybe it's by 5%, maybe it's by 10%, whatever, and that the probability of recession is higher. Angelina and I were playing a game where we're like, what are the things that we can definitively say that we know? And our assertion was that at the average cost of every transaction is going higher by some amount, small, large. That the average value of everything goes down when the average cost of everything goes up. And when the average cost goes up and the average value goes down, the probability of slowing economic activity goes up. Do you think that those three truths are valid? Or were you willing to accept those three truths?
It depends. If you're talking about Americans, yes. If you're talking about the rest of the world, you said you're having this conversation with Angeline.
In London.
In her world, I would not agree. If you're talking to me as Dylan Ratigan, Italian citizen, I would not agree.
Sure.
If you're talking to me, Dylan Ratigan, US,
why is that? Why don't you think that the non-Americans get a higher cost basis for everything?
I think non-Americans get a huge advantage from everything that's going on here today. I think you saw it today with the because there's a certain amount of independence. There's a certain amount of opportunity that we are creating now for everybody else with what we are doing. So the one side of it is to look at it as that it's just one way. I'm actually looking at it as the other way. And, being a shareholder, Tasty was bought out by, a UK firm. And so Tasty's listed, we're listed on the London Stock Exchange, right?
Okay.
And that exchange, just as an example, I'm just using, it's very fair for me to use us as an example because we're a good example. So I've been kind of gotten dirty with the, being a listed company in London and watched when all of the UK stocks did absolutely nothing for the last couple of years and the US stocks exploded, right? And the UK stocks are not, they're not living on an island. It's most of the rest of the world. It's Europe. It's all of Europe. It's different places. I mean, I know some of the markets are up, but also some of the markets have all the markets have grossly underperformed,
Sure.
the U.S. markets over a period of time. So I think what the unintentional consequence of what's happened with everything that's going on in the U.S. right now in this whole, isolationist policy of this whole tariff policy, what's actually going on is we're providing an opening that didn't exist before. Europe was shut out for all intents and purposes. Europe was completely shut out. The door was closed. And I know this.
You're saying whether it's for listings or whether it's just for any first prioritization. It was always a second option or a non-option.
Of course, yeah. It was definitely a second option, a long distance second option. Distant. And I think what just happened is, and this didn't apply just to listed, it didn't apply just for market structure. It also applied for things like, capital financing of different things. It could be financing of
raising
defense
money
contracts.
For a new company or a new project, just raising money.
Period. Well, when you think about
stocks,
it's defense, it's space, it's communications, it's basically it's finance, it's anything you can get your hands on. There's always been this dependence on the U.S. and this reluctance to do anything domestically because you can't compete with the scale. and you can't compete with the ability to capital.
Well, the Milan Stock Exchange is a classic example, just to use a familiar reference here.
Every stock exchange
so shallow, but it's so thin.
Yeah.
You know why? What are you talking about? Frankfurt, so thin, so shallow. Like, what are we doing? Paris, come on.
The London Stock Exchange. The London Stock Exchange is a ghost town, and so after being listed in London now, for 4 years and watching what happens over there and the amount of interest and how people buy equities and how they think about investing, it's a horrible place to be. The flip side of that is something for the rest of the world the rest of the world just got a wake up call, and they got slapped. They've been stepped on for so long that they just got a slap in the face. They woke up, and all of a sudden they're like, you know what? We can do this. F you guys. We can do this.
There's more of us than there are of you, basically, whether it's the Chinese with the Japanese.
There is more of them. There is more of them. And when you look at different places, talk about, look what we did for Mexico. Claudia Sheinbaum went from being, kind of not a very popular political figure to being one of the most powerful women in the world. The new prime minister in Canada, because it's a parliamentary system.
Oh, Mark Carney.
Yeah, Mark Carney. He's probably the most popular of anybody there ever already, because
he said "F you," I got this.
Just right, exactly. Right. Hey, we've got there's other vehicles, and so and everybody in Europe has kind of taken that approach, they went from having no leverage. I think the miscalculation that the Trump administration made, and it truly is a miscalculation, is that they had all the leverage, and
America has all the economic leverage, full stop.
We had
whether it's on input, whether it's as a market, capital markets, consumer markets, any market.
We had all the leverage. We had leverage every which way. We have all the money. We had all the leverage. What the miscalculation and the mistake that this administration made, and anybody can yak about, we didn't make a mistake, or this is just the beginning, and 3 years from now you're going to get paid, whatever. I don't care. The mistake, everybody, they emboldened everybody. They gave everybody the power back. They lost all the leverage, and now it's just a game. Now everybody's going to negotiate, and in the end, they're going to say, okay, you remove this tariff, we'll remove this tariff, blah 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 blah. But it doesn't matter, because they've empowered everybody
because they've awoken the beast, whether it's the German, French, British alliance, or whether it's the Korean, Japanese, Chinese alliance, or whether it's the Mexico, Canada, England alliance, or the Italian, whatever. Like, everybody's active now. They've created a dynamic non-U.S. economic world.
That's right. And they've essentially said, if you look at the way money is flowing right now, the money flow now is out of is out of U.S., is out of kind of some traditional products, and into like, listen, we'll do this ourselves. Mm-hmm. We can do this ourselves.
So go ahead.
So
to that end, there's been discussion. Because it's sort of interesting. It's fascinating to watch it every day, right? Like, again, I'm really fascinated because when was the last time Japan, China, and Korea were aligned? I don't know if it's ever happened.
I don't know if it's ever happened.
Because they're mortal enemies, or at least rivals. I won't say mortal enemies, but certainly not friends. And you see the same thing in Europe, whether it's, again, the Germans and the French, and then the Germans and the French plus the British, and anyway. The incremental sort of advancement of the awakening of the beast and the kicking off of the cobwebs, and basically just dealing with the hassle of like, well, which language are we going to use and which regulatory regime? Like, everybody just kind of avoided it. They're like, no, we're going to be French and you're going to be German, and we'll just all work in New York and Chicago. And now it's like, well, hang on, we're not going to work in New York and Chicago. We're going to work in Europe, so we better figure out a language, which will be English, obviously, for everybody, for contract law, and we got to figure out a regulatory regime. Do you actually believe that there's a possibility of a deeper, more relevant, more active capital market in Europe as a result of this?
No, I don't believe that there is right now. But what I do believe is that the momentum has shifted, and what I know for a fact, the momentum has shifted, and I know for a fact right now, for the first time in 4 years, since we've, been part of a UK company, for the first time, there's actually interest, not because our business changed overnight, because it hasn't, but simply because there's a money flow that's going in a different direction. Like they reverse direction on the money flow, and the money flow is now going into a lot of the European markets, and a lot of
there's a natural bid for IG Group, or for that matter, UBS.
There's a natural bid for everything. It doesn't even matter.
For Daimler Benz or Volkswagen or Fiat or.
There's an appreciation for a different marketplace for the first time. And what you're seeing is some of the money flow out, and not even reluctantly. You're seeing some of the money, just like you're seeing a huge sector rotation take place right in front of our eyes, and it's self-inflicted. Now, you can go back just 3 or 4 years, and you can play the tape, and you can watch what China did. And it's so similar and so scary.
Different in terms of the self-inflicted damage from when China went full crazy pants.
Yep, exactly. And it's the concept of self-inflicted disruption. You got to remember that disruption is something that big corporations need to do to stay relevant, because they have to stay at the forefront of their technology, and they have to stay at the forefront of innovation, and they have to stay at the forefront of buying other businesses so they can stay out in front of everybody. Governments are not the same thing. Economies are not necessarily the same thing. You can't disrupt an economy like you can disrupt a corporation. And so China learned the hard way. They basically stifled their tech companies and learned the hard way how that destroyed their real estate market, their economy, everything else. I'm nervous that this current administration took a page out of that playbook under the guise of, we're getting rid of all the bloat and all the inefficiencies. So what we're doing is we're cleaning up the inefficiencies, like we're laying off, like a corporation would come in and lay off 10% of the workforce in an effort to,
But it's sort of the style where it's like everybody with an even numbered social security number, like sort of the randomized madness.
Well, it works on a corporate level because you get your expense ratio way down, and you clean up your balance sheet, and then you attract investors. It doesn't work the same way for countries and for governments, because it's just not the same thing, and you can't run a government like you run a business. And you would love business people to be involved in government, but you can't run it the same way. So the approach here of just slice everything off and then try to rebuild, what it does is it sets you behind. I mean, I don't understand why we couldn't look at the Chinese model and see, I can't believe we couldn't look at like how disastrous the Russian model was, but that market was so thin to start with. The Chinese market wasn't that thin. You got to be careful when you go with full-scale disruption. And again, why? Why? The argument that you're just trying to lower the cost of your future debt, I don't buy it. It doesn't work that way. And so this is the problem, that we've kind of made our own problem. We went from having no real issues to having big problems because we've emboldened the rest of the world. And I don't know what that ultimately means, but we've lost the leverage.
Who is there a point? Is the leverage? I mean, this is going to be impossible. I'm trying to ask this question in a way that is answerable. Where has the leverage most clearly shifted in your opinion? Obviously, it's sort of diaspora. It's sort of the reason it's like not a great question, I guess, is because it sort of diffuses to the world. Is it in Canada? But is there a clear locus of power that's emerging relative to, in the sense of leverage, whether it's the coalition in Asia or a coalition in Europe, or it's too soon to know?
I think it's too soon to know. I don't know the answer to that. I think it's too soon to know. But leverage is really interesting. Leverage is something, we were negotiating a real estate deal for Tasty, and one of the things I pointed out to the other party was there was an article this week in Cranes, and it said Chicago commercial vacancies in the downtown area were at an 11, were for 11 straight quarters have gone up. So it's record amount of, vacant space.
Inventory. Yeah.
Inventory. And the argument is, okay, that's great. That means leverage is in our favor. We're negotiating a deal. Leverage.
You guys are trying to get in. You're trying to pick up some inventory. You're saying you're on the buy side.
Yeah, we're trying to pick up inventory, and when you're trying to pick up inventory, when vacancies are at 11 straight down quarters, the leverage is in your favor. It's not rocket science. I mean, there's more sellers than buyers.
Sure.
And that's when you do your best work. And I'm fearful now that you got to, the idea of you raise money when you can, not when you have to. And I feel like we've had such an easy go at raising capital in this country, and now it's going to be a harder go because the money's going to look elsewhere.
Mm-hmm. There's the leverage. My one quick leverage story I'll tell you is in the years when I was hosting Fast Money and I was living in lower Manhattan, and because Fast Money, if that I guess probably still is, but at that time the show I was doing was ended every day at 6 o'clock, and I would get home at 6 around dinner time. I would be walking home basically between 6:30 and 7. And one of the regulars in the neighborhood where I was living was a man named Harvey Keitel, who was a well-known actor.
Yeah, sure, I remember him. Harvey Keitel. Sure. Yeah,
right. And Harvey was actually a fan of, would watch the TV show. He was like, but he was like, he'd have 2 cents. He obviously wouldn't watch every day, but he would watch it. And so we became like sidewalk friends in the New York sense of the word, like just to chat on the corner. And the show had become a big hit and whatever, and I had leverage in a contract negotiation basically with NBC. And Harvey knew that I told him the deal's like, he's like, "You're gonna stay?" I'm like, "Oh, the deal is up. We'll see, whatever." I was young. I was probably 33 or 4, something like that. And Harvey pulls me aside on the corner and it's like in his full character, And he's like, "Remember, kid," he's like, "when you've got him by the balls, squeeze gently." And I always thought that was very good advice. And I think that that's something that Trump has not done here. Like Trump basically felt like America has the world by the balls, which is true, as a capital market, as a consumer market, as a reserve currency. And he would have been much better served to take Mr. Keitel's advice to squeeze gently in the negotiations, as opposed to this insanity where he's basically just horrified everybody to run away as far as they can, as fast as they can, anywhere they can, as soon as they can.
No question. You're 100% spot on. But Trump's MO is, his strength is in sales.
Okay.
People get confused because his strongest attribute is that he can sell anything to anybody, and he's obviously done that. He's been president twice.
He sold the world that he should be the president.
Of course.
And so the American, not the world, the American voter, I guess.
He could teach a master class in sales. That's the upside of Trump, is that he's a good salesman. The downside is he's a horrible business person. And he doesn't understand it, and he doesn't want to understand it. He doesn't spend the time to understand it, and he's dangerous in that capacity. So, that's where
Meaning he does not know how to use leverage to get what he wants because he overestimates his position, basically, or he doesn't know how to manage his position, whatever that means.
He's just a bad business person. I mean, that's why so many bankruptcies. But he's the other side to him. He's a great salesman, so he keeps raising money. And that's a skill. There's an art to being a great salesman. And and nobody can take that away from him because he's effectively done that.
So let's say that the yard is now open for the Germans, for the French, for the Italians, obviously for the British, for the Chinese, for the Japanese, for the Mexicans, for the Canadians, whatever. Let's say 10 to 15 economies of some consequence.
Sure.
In Asia, North America. Would you go so far as to as American investors, which we both are, and most of the audience of this podcast, I believe, likely is it to the point where would you allocate either trading or investing activity? Are you inclined to follow the changing flows away from the United States in any way?
I don't.
Other than the fact that you're already naturally there because you sold your stock to a British
I'm naturally
company.
there. But if I wasn't naturally there, my answer would be no. It's not an easy thing to do. For people that live in other places around the world, it's relatively easy to invest in the U.S. because almost every financial service company offers access to U.S. markets. There is no U.S. There's almost no, I shouldn't say there's no, but there's almost no U.S. financial service company that offers access to markets anywhere else. I mean, there used to be an E-Trade ad that ran, I don't know, 25 years ago, and there'd be some, the kids would clap because they'd be like, Daddy just made a trade in Japan. No, he didn't. That was all bull. Like they never offered Japanese stocks. One company that we compete with, Interactive Brokers, has a global network, but it's not black and white. I mean, you have to convert currency. There's a lot of things you have to do. I'm a proponent of tokenization for the sole reason that I want to invest in other products and other markets, but I don't want to, own different currencies all over the world. And because I think it gets a little bit confusing and it gets a little bit disorienting. And I also, you have to clear different places. There's just so much work involved in investing all over the world, and it's very difficult to do. And I give people that live other places a lot of credit for being able to trade U.S. markets, but they crave the liquidity that we have. It's not going to be good for U.S. investors to get into markets where we don't even understand how they work. Like, just to give you an example, Scott and I managed a fund once in Japan, and it took us like 2 years to figure out how to buy stocks there. Like a round lot in Japan for one stock could be one share, for another stock could be 10 shares, and for another stock could be 100 shares. And those are all round lots. And just figuring out how to access, the Japanese, the Nikkei, and how to trade in that marketplace, was an obstacle we couldn't overcome as professional traders. So it is not easy to do. And on top of that, we're very ethnocentric when it comes to currency. So most other places around the world know what their currency is to the US dollar, but go ask any American on the street, nobody has any idea. Nothing. How currencies work. I mean maybe
do you think any of the world markets, do you think that any one of these countries is better positioned than any other to exploit the opportunity? London, because of the language, would be the kind of obvious one, and because of the culture,
because of the London hours and stuff.
London and the culture, and it's a Wall Street culture, and it's the language, and
yeah, but it's London. The problem in the UK is the problem in much of Europe. They're still, the investing and the strategic mentality there in the world of finance is still 20 years behind the U.S. or 10 years behind the U.S. And so they have a lot of issues. They have know-how issues. They have cultural issues. They have just, their issues have issues. So I think it's going to be very difficult. I think they're about to get a huge influx of capital because just like you said the key word before, you said if you add it all together, they're bigger. They're bigger than us. And so if you're talking about pure size, and there's a lot of wealth too, we're talking about size and wealth. Yeah, there is an incredible amount of potential there.
No, there's more people and more money. Yeah. It's just poorly organized and inefficient and compartmentalized and trapped in noble families and different languages and trusts in France and weirdness in Japan and whatever. And that was what I was thinking and listening to you is, does the adversarialism of America finally incentivize basically,
I think it does.
Tearing up these legal contracts in Japan and Italy and France and Germany to make things move around more efficiently? You think it does?
There's one of the things that's always held back the rest of the world is there's a lot of conflicts. And what I mean by conflicts is, people are people all over the world are really smart. And it doesn't take a genius to realize when the executive branch in whatever country you're in has conflicts with what they're allowed to do, how much they're allowed to take, what they're allowed to invest in, all that kind of stuff. When the executive branch has conflicts with the public marketplace has no integrity. The U.S. has always had this separation of politics and financial markets, or the executive branch and financial markets, and we've been very clear not to cross over that line until now. And so that line's been crossed, and now it gets murky and it's cloudy. And so that's what's at risk here is the integrity of the marketplace. How much are people going to be willing to? I mean, you see the blowback on Elon. Okay, you see the blowback there. World's richest person. He didn't need to do this. Now you see the blowback. And
he was a hero 5 or 10 years ago.
Sure.
Now he's a villain, right?
That's right. So why do this? Like, what was the point? And you're going to end up with the same. Well, I mean, it's easy to figure that out, but I'm just saying, now the conflicts are too great. Now you look at Elon, you say, the first thing you say is, well, behind the guise of cutting, whatever they entitlements on down, you say, well, they replaced the communication system with Starlink. They replaced the space program with SpaceX.
Tariffs benefit Tesla.
Tariffs benefit Tesla. Potential military contracts benefit, for electric trucks and things like that benefit Tesla. So now you've got them, replacing, essentially. It just goes straight down the line. You can make an argument. It goes
to the rotting of the integrity of the American system,
right.
Which was the differentiating factor relative to Italy or Russia or France or anywhere where it was like, oh, well, the rich families control the government and the rich families control the companies, and they take care of each other. I mean, it's taken for granted. It's not even a point of, it's like, yeah, what are you going to do? And America was always not that. America was exactly the opposite of that. The reason America was aspirational. So I guess the next question is, let's assume that's obviously been impaired or destroyed or whatever. Do you think it's recoverable?
Sure, everything's recoverable. I mean, America is. Let's be fair about one thing. America's too big to fail. If you think J.P. Morgan's too big to fail, America's too big to fail in 100 different ways. I mean, China was too big to fail. India's too big to fail. Even Russia, which couldn't have been worse than they've been, is kind of too big to fail. So yeah, America's way too big to fail. There's not even a remote chance. So for America, it's just how bad is the damage before we figure everything out and everybody, revolts, straightens everything out, says, hey, this is not cool anymore, which will happen. But no, America's way too big to fail.
I was talking to Josh, who's our producer, about this earlier, and it's like, on the one hand, how do I say this? On the one hand, once you expose yourself as a lunatic, it's not easy to just become trusted. Like if you don't have a great professional relationship for decades, which we have and we do, and then you or I and if somebody displays some really hostile and bizarre behavior, it's hard to pretend that didn't happen and just continue. Or if you're in a romantic relationship and it's all good, and then somebody pulls out a knife in the kitchen and threatens to chop off your finger, it's not easy to go back the next day and be like, oh, well, never mind about the whole knife thing in the kitchen. Like, it's fine, And I just wonder the degree to which, the American behavior makes it hard to go back to they've already authorized a military. The drone army in Europe is underway, right, with the German debt cap waiver and all. There are structural restructuring actions that are underway that are not easily reversed, I guess, is my point. There is a case we made for a permanent degradation of the relative power of the United States. But for the fact, I think it's in everybody's interest for America to be fabulously productive and powerful. I think it's in Europe. It's in Europe's interest, Asia's interest. No, everybody wants a strong United States, I believe.
Years ago, I remember like great sports teams like the 1985 Bears and the Bulls when they were in their heyday with Michael. And one of the things that great teams do is they never give the opponent a chance to come back. Like when you have your opponent down, you step on their neck. Mm-hmm, like, you help them up and then you finish the job. And one of the things,
you don't take Michael Jordan out of the game because he's scoring.
You just don't let him come back. The 85 Bears didn't let anybody come back. They just would pound you to the end of the game. The Bulls did the same thing. They would just beat the crap out of you to the end of the game because Michael was so competitive. The great teams do that in sports. And in the, when it comes to kind of the economy, it's a little bit the same thing. You're not going to step on everybody's throat because you need them as trading partners, but you don't give anybody the incentive. You don't give them the bulletin board material to come back at you. You don't let them all gang up against you.
Yeah, well, there's just no reason to activate everybody else in the world to try to figure out everything they can possibly do so that you can never screw them over like this ever again. I mean, they're like, we need to make sure that we're never this vulnerable ever again, whether it's, all these countries.
Yeah. So anyway, that's kind of like, in a weird way, I feel like that's where we've ended up in the very short term. I don't know if we stay here. I don't know how bad or it gets or whatever it is. I assume it's going to be very, very cyclical from here on out. I assume that it's going to be, it's going to look great one day and horrible the next day. And that cycle is not going to change that much because that's what it kind of looks like right now. But listen, we've already done enough damage. I don't think we need to do any more.
Do you think that this is as Chris Vecchio would say, that whatever happens with the tariff announcements later today is ultimately a risk clearing event, in the sense that that it'll be viewed as, okay, well, now whatever it is, that's what the uncertainty will be removed, whatever the numbers are? Or is that wishful thinking? Because
no, that's not wishful thinking. That's exactly what's going to happen. That's what always happens. In this case, it's a sell the rumor, buy the news. And so, because the worst of whatever has happened, the worst of it is already out. I can't believe, I know there's a big number on Friday and stuff like that, but as far as the whole tariff thing goes, today will be the end of this will be the absolute end of that whole, at least I think for the short term, this will be the end of it.
So from a trading perspective, does that give you, I haven't looked at the market since we've been talking, but I know there was more of a bid than not coming in here. I mean, does it make you more optimistic as a trader coming off of the back of this thing for those reasons?
Well, I think that the market's already ahead of that today. I mean, we were down when we opened this morning, we were down 60 handles, and the whole rest of the day we've spent up 10, up 20, up 30. We got up 60. Sure. So there's been 120. There's been from 1% down to 1% up. So I think the market's already priced that in, and the market, the market woke up at some point late morning and just said, you know what, you're right. This thing is all going to be over today, one way or another. And I think that's priced in now.
Right. Although I'm just looking, you can see for yourself, we're back to dead even right now.
Yeah, we're back to unchanged now, but the kind of tape action that we've seen today, if we were in a huge heap of trouble, the volatility wouldn't be down 2% today. And I don't see this as I don't see the tape action right now as any kind of a precursor to anything really ugly happening. If anything, I would say the tape action is relatively bullish today. And I don't see this as a bad situation at all.
Hmm. Do you think that the flow of funds into euro equities or max or that the money keeps moving the way it's moving, whether it's into London or Frankfurt or Paris or Milan or Tokyo or whatever?
I think that it's long overdue to have money shift into multiple places. I have a buddy that manages a private equity fund in out of London, and for
Mhm.
10 years he's been telling me that that this is what's going to happen. And it
Mhm.
hasn't happened for 10 years, and it's finally flowing into other places. So I don't think this is any kind of a surprise. Um, I think it's a long time coming, and it finally, it needed an event trigger. It got it. And now I think it's kind of like, okay. I mean, I think everybody was waiting for this, myself
I mean,
included.
there's got to be some obvious beneficiaries that I'm not even thinking of that are like, I don't know if they're tradable, but like the accounting firms, the law firms, like part of the flow of resources in this way has to move around accounting and legal streamlining to make it easier to do. Somebody's going to make a bunch of money doing this, I guess is my point. Just on the facilitation side, I mean.
Global business laws are really bad, and they've always been really bad.
Exactly.
A story that I like to tell is that in 2006, we tried to buy a dev firm in St. Petersburg with 80 developers, and we negotiated a price, and we had a done deal. So we flew to St. Petersburg to close the deal. We spent 3 or 4 days in the legal offices of some huge New York law firm that happened to have an office in St. Petersburg, and they were representing us. The local firm was representing the Russian company, dev company, and but they were a global firm. They weren't like a Russian firm. These are both
Hmm.
global firms. We could not do the deal. We agreed on everything. Price. We're friends. We're still friends to this day.
Yeah.
We could not do the deal because Russian business law. We had no idea what we were buying. Like we weren't sure what we end up buying.
Once the
And
asset, once the title transfer occurred, you didn't know what the title was, what the rights to the title represented at the end of the
exactly.
day.
And it ended
Hmm.
up falling apart after 3 or 4 days of just trying to negotiate the terms because we had agreed on price before we even flew over there. Everything was done.
Hmm.
And there
Hmm.
was no argument between the two CEOs, between the
The two
founders.
principles were fine, but you
Oh,
couldn't get the
totally.
legal to line up.
And it was just the whole deal fell apart. And
And I feel like that's going to be that's kind of the primary issue for all business around the world,
yeah,
meaning actually, and then one of the most appealing things about the United States is easy, liquid, reliable contract law, Delaware courts, all
that's
the
right.
things we all know, blah, 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 the banks. Um, this probably creates an incentive to get rid of to solve that. The point is now that with the wake up call, like if the only reason you can't take money into England or Russia or Germany is because of some archaic corporate law, if there was ever an incentive to update or amend or change the law, the Trump presidency surely would be it.
The the one of the beauties of decentralization was kind of that philosophy is that, you know what, in order to level the playing field, in order to equalize opportunity from whether it's from some country in Africa that has an amazing startup or it's some company or some country in Eastern Europe or it's another country in Asia or Australia, whatever, anywhere close to, is that everything will be commoditized and normalized through decentralization and through potentially eventually through tokenization, but just say through decentralization, it normalizes everything because it makes doing business easier, and it hasn't happened that way yet. I'm still hopeful, but global
But maybe
business
that's the
laws.
silver lining of the Trump presidency is that it will actually accelerate the 21st century global business infrastructure to make movement of ideas and capital around the world more
For
liquid and more
for
viable.
all the wrong reasons. Yes. I mean, yes. I mean, all the good, everything always works out, but sometimes it's not for it's not for the right reasons. It's not very genuine, but we'll see. Anyway, it's a heavy discussion, and we're out of time today, Dylan, but that was good. It was really good. Just a little.
Yeah, well, it's interesting. I actually think this is going to be a really fascinating time. I mean, I know not to dwell on it, and it's not just about capital markets, but I do think that it'll sort of like for the first time, it was always the default was like, of course, we could figure this out in Milan, or we could figure this out in Frankfurt, or we could figure this out in Tokyo, but why bother? The center of gravity is New York. It's easy to do it in New York. Everybody's got a lawyer in New York. Everybody's got a bank in New York. Like, who needs the trouble? And so, but that's not because they can't do it in Tokyo or Hong Kong or Berlin or London or. It's because there's no why. Who needs the hassle? Like, it's easier for everybody if we just do this in New York, whatever it is from a business perspective. And now's really the first time in our lifetimes, I believe, that we're going to see what's possible outside. I mean, I had lunch with an Italian defense contractor who basically can't even believe his luck. I mean, he's like, he was irrelevant. I mean, he was a tiny little company. He wasn't like, it was like a startup. He had already sold another company. It was like fun for him. He's like, oh, we'll do like this materials thing. Well, I'll hire these engineers. I can work with the kids. I like materials engineering. Yeah. It's like it was like a toy. He had already done he had a big Wall Street career at JP Morgan and whatever. He'd moved back after being in London as a proper banker. And it was just a thing. He's like the kids, whatever. His kid had gone to school, was an engineer, whatever. All of a sudden, it's going crazy, and Canada's calling saying, well, will you build a factory here? All the rest of it. My point is it's going to be I think it's going to be very fascinating. I do hope ultimately it's not at America's expense. It's obviously not going to be without a price for America, unfortunately. But a healthy America is the best thing for the world. So hopefully this whole thing works itself out.